It's live.
Subitaiji color.
Wow. I need the computer. Hi guys, good night. Thanks for joining. So just give me just a few seconds here while some of the other guys get on, and we'll get right into it in about, say, the next 7 or so minutes. So just bear with me for a few minutes, all right? Thanks, guys. Okay, so again, good night, everyone. So we're still about just 6 minutes in. I think most of the other guys are probably taking just some time to get on. For those of you who would have attended US MEC, which is our stock market masterclass, you know I have the habit of starting pretty much exactly on time. I'm being a little bit more lenient tonight. And so we will start at around 9:10. In the meantime, for those of you who are here, you can always put your names in the comments section or in the live chat so I can see who is here, and just to acknowledge you guys, okay? The early birds. Okay. Miyosoti. Hi, Miyosoti. Kimoya. I see you. Hi, Mr. Davis. I see I remain Bartley. Hello, Mr. Bartley. Merrick. Merrick is here. Merrick, I think I owe you an answer for a question from last week, right? Okay. Really? Okay. Mr. Siobhan Grant is here. That's good. I see. All right, so we have 20. Cool Squad is here. BG so cool. Ever supportive, as usual. Guys, you should check out BG so cool's channel. I mean, if you guys want to laugh, then some of the pranks he does are like really, really cool. Chadwick, nice to see you. Devon, welcome. Delon, sorry. Unless I misspell it. Which one is it? Is it Devon or Delon? Daniel Ferguson. Alright, we're not going to do that. Because I'm not good with patois. So I ain't even going to try that. Robert, hi. Aquino is here. Blue Flames. Alright. Cool. So, alright, so 9:09. Let's see if we can get this show on the road. What am I missing? Okay, so a few things, just an update for some of you guys. So I was actually on the road today. If you guys are actually following me on Instagram, shameless plug, my Instagram is at Devrhoid, DEVRHOID. And I know you listed them on your website. What's that? What's that, Merrick? Okay. Let's see. In the middle with Marlon. That's interesting. I mean, hi Marlon. Interesting name. David Gray is here. Delon. Okay, thanks for clarifying that. Alright. So, most of you, again, as usual, you'd have seen the flyer. So you know what we're talking about today. Certainly looking at the market review, and it was quite an interesting market. Anybody, by the way, notice that we've started to see the turnaround in the junior market companies already? If you guys haven't noticed that, then, well, I'm telling you no. But already we're starting to see a turnaround in the junior market companies. And it actually substantiates what we had suggested earlier, that a lot of the fall or a lot of the decline that we've seen in the market was in fact due to the Trans-Jamaica Highway IPO. Alright guys, you're going to see me look to the left because I have a screen over here, and that's for your comments, and on the right I have the computer. The phone is plugged in, so we won't have any power outages, I hope. I have enough battery probably for an hour, and I'm on full data with relatively good service, so let's see how this one plays out. Yes, right. So I was saying earlier that we've started to actually see a reversal. Jeffto, good evening, Jeffto. All right, so it's now 9:11. if I see you guys in the comments, I might segue to say hello, but I'm going to be going into the actual review and the presentation for this evening. If you have, of course, any questions, as usual, leave them in the comment section. Once we're going through, then I can return to actually answer or address those questions. Some of the things might be good for conversation as well. All right. I think I'm going to put this here. Take gamma out of the scene. Okay, so, Nicholas Wright is suggesting we start with first rock. Well, there's a lot that I need to speak about with first rock, but just let me go over the market first. And of course, first rock is going to be the first thing that we talk about when we actually start talking about individual company performance. Where am I? Development. Okay. Hello, Romario. All right. So the first thing I already mentioned this, but just in case most of you that are joining now have actually seen the flyer, I'm not going to necessarily go over what we're going to be talking about in terms of this live session. Key for me to state, however, is that, again, as most of you may know, I am not a licensed financial advisor, and so all the information that I'm going to be sharing this afternoon is meant for educational and information purposes only. They are not meant to be misconstrued as financial advice, and neither is anything that I'm going to say, however bullish or however bearish, is an endorsement or a put down of any particular company or security. All right. Most of you, again, are familiar with my investment philosophy, that of being a value investor. And so you already know that for me, my okay. Okay, Paul. You know that my method, my MD, of course, my modus operandi, my MO, is to actually start with that disclaimer and then to get into what my Paul Davis, don't do that. Please don't do that. I'm not like in jail. Right. So, and then talk a little bit about my philosophy. So, before I get into it, for most of you who don't know, all my information is somewhere on the internet. You can, if you follow Beyond the Stock Price, then you'll actually get an introduction to me. And of course, Caribbean Value Investor is my own company. We are a media company that's also positioned as an independent equity research firm. And we basically conduct ongoing quantitative and qualitative analysis. Basically, we look at the numbers of the companies and we try to assess where is like a fair value to buy them using both whatever is in the news as well as what is stated in the financial statements. I'm the author of 2 books. This is one of them. This is Beginner Stock Market Investing. So it's Stock Market 101. And it's written for beginners. But on my website, you can actually find advanced material going into as far as like trading strategies for day trading or intraday trading. We have technical analysis, which is conducted by Jonas Farr, who is our technical analyst and our quant. And he's based in Norway. He's also a shareholder in Caribbean Value Investor. So hopefully that's enough context. I've also done the JSE Securities course as well as the Bloomberg Markets course and quite a few other online courses in terms of financial analysis and valuation. Later on, I'll actually show you guys just some of the books that are actually on my shelf that I've been reading and some that I tend to go back to from time to time as a reference. Oh, the name of it's actually my first book. but it's called Developing the Best You. It's a book on personal development, professional development, and financial literacy. All right, it's on Amazon as well. Good. So this week, of course, we are in earnings season, just the same, but this time we're looking more at the audited financials. We saw quite a few companies releasing their audited financials for the 2019 fiscal year. Well, in the case of some of them. And unfortunately, I haven't had the time to go through all of these companies as yet. Normally, when I'm going through, it takes me a time because I have to convert the financial statements into a different format in order for them to work in our Finjin platform. So we saw Jamaica producers giving out their audited financials. We saw Sterling Investments, Kingston Wharves. We saw Grace Kennedy, Kingston Properties. Who else? Who else gave? There are quite a few, and I'm sure that going into next week you're going to see a few others. Stationery and Office Supplies, Supreme Ventures is also out. KLE is also out. According to David Knight, JSE Knight on Twitter, there are about 30 companies that are due to release their earnings, and I'm quite bullish on a few of them. SOS is one that I'm very optimistic about. KLE also, Stationery and Office Supplies. I'm very much interested to see what Grace Kennedy puts out, and of course I'm looking to see what I'm looking primarily at the juniors. Reason being, as I've stated earlier this year, it's my assumption or my expectation rather that the junior market companies are going to actually outperform main market companies for the 2020 calendar year. And we can talk a little bit more about why it is that I'm of that opinion. But I've mentioned this on Kalila Reynolds' show, Taking Stock. And I mentioned the reasons for that there as well. Alright, so let's start with First Rock. So most of you guys have seen that First Rock listed this week. Was it last week Friday? Somebody can correct me on that. I don't remember the exact date. But aside from that, it was on February 21st. So that would have meant last week, February 20th. So that was last week Friday. That's how it is. I think so. Thank you, Nicholas. Right, week before last Friday, absolutely right. And then this week we saw where Defcan Coffee became the first company to list on the Jamaica Social Stock Exchange, which was something that they were actually talking about from 2000, I believe, when we had the Capital Markets Conference for 2018. That was the first time they mentioned it. It was launched officially in January of 2019, listed on Jamaica Day. Okay, thanks, Shani. And now we have our first company. What's it? Oh, what's the Social Stock Exchange? All right. I'll mention that just a little bit after. But Defcan is the first company to list on the Social Stock Exchange. The Social Stock Exchange is an initiative by the Jamaica Stock Exchange to sort of help out social enterprises, giving them an avenue to access capital. It's in its current state. It's actually sort of arranged like a like a GoFundMe, where it's accepting contributions for those projects where persons might be interested or find themselves aligned with those projects. There were quite a few. There's a video on Beyond the Stock Price talking about the launch, so I'll link that up in the description after the live, where you can go and search for. The title is Jamaica JSE launches Social Stock Exchange. That's the title of the video, and it talks about the 5 that were in the pilot. And on February 27th, thereabout, Defcan Coffee became the first one to actually list on the social stock exchange. They got funding almost entirely, well, I should say more rather, they got significant funding from NCB Capital Markets. And so they actually surpassed the amount that they were trying to raise. Hence, they're listed. Combined contribution to Defcan was around $7.5 million. All right, let's talk First Rock. Okay, so most of you would have already seen where First Rock's stock price is. You guys would have also been aware that the stock listed on the, not listed, but had their IPO earlier this year. It actually started last year. It was announced last year and it opened this year. They were seeking to raise about 580 million Jamaican dollars, or I think that's 9 million worth of Class A shares as well. Let me just pull that up. But the shares came out at around $16, I believe $16.16 per share, using the formula that they had in the prospectus. Thank you, Devon. And on Friday, the stock traded as low as $10 per share. So that's basically a 40% decrease over the first week of trading. Now, most people were already sort of pessimistic on First Rock. They didn't sort of appreciate what the company was, and I use that word deliberately, saying that persons didn't appreciate what First Rock was. And I had the pleasure of actually questioning the managing director and the CEO at the JSE Capital Markets and Investor Conference. And today I actually ran into him and actually asked him off camera his perspective on the decline in the share price. I had promised that I wouldn't be sharing that publicly, and so I will honor that commitment. What I can say is that, okay, so breaking news just came in that the second death from the coronavirus in the United States has just been confirmed. And again, coronavirus is something that we're going to touch on after we actually look at First Rock. But getting back to the point that I was discussing, First Rock, in my opinion, this is my personal opinion, First Rock is actually misunderstood. Now, a lot of persons tend to see First Rock Capital Holdings, and because the prospectus tended to focus on the real estate that they were doing and the developments that they were looking to start, the purchases they were seeking to acquire, persons tended to think that First Rock is just going to be a real estate investment trust or something similar. Kalila Reynolds also has a video talking about what a real REIT is and explaining that Jamaica doesn't really have any true real estate investment trust. What we have are REIT-like companies. First Rock is not a REIT, and First Rock is not simply a REIT-like company. If you go back to the prospectus and if you look back at the interview that Kalila did with Ryan, he mentioned that First Rock is going to be doing all things real estate. Now, if you don't fully understand real estate as a business, then it might be easy to think that First Rock is just going to be buying properties or building properties and renting them out. I'm in the fortunate position that my mentor is actually in real estate and has been in real estate for the better half of 15 years. Better half of 30 years. So it's around 15 years. I don't think I can name a mentor's company here. Anyway, you can take me to task for it later on. But my mentor has a company called McLean Global Real Estate Services. Now, I think that's a better name than First Rock Capital Holdings in the sense that it tells you that what the company is focused on is real estate services. And there are a number of services that actually fall under real estate. So if you think about the typical real estate transaction, you're looking at a situation where a person is seeking to either buy a home or sell a home or rent a home. This is not the entirety of what comprises a real estate transaction. So how it was explained to me is that there are basically three sides of a real estate transaction. Whereas in the normal transaction, there are two sides. You think about the stock market, there are two sides to that transaction, the purchase and the sale. That's it. In real estate, there are three sides to the transaction, and if you want to get complicated, you can actually speak about a fourth. I don't fully understand the fourth that much, so I'll talk about the three that I understand. The first one is the purchase of properties. Now, from the purchase, you have what are known as like the brokerage services. The other side of that is the sale. So that's a typical transaction that persons are familiar with. You have the purchase and the sale. And how money is earned on that is through a brokerage fee. So the person, you have different situations. You have situations where the person who is buying will sell. You have other situations where it is the person who is selling the home that will actually pay the fees. And I think typically these fees amount to around 4 or 5% for the entire transaction. In some jurisdictions, you can get up to 6%. All right. The other side of the real estate transaction, and the one that is less talked about, is the financing of the deal. So the person who is looking to purchase real estate is going to typically need financing. In Jamaica, most of that goes through a commercial bank or a building society. However, in America and in some other countries, you actually have real estate financiers. These are people who literally provide the money to buy real estate, whether it is a commercial building, a residential building, or even raw land. So if you think about First Rock, within First Rock decline is based on public perception and ignorance. All right, Devon has a point. Well, he made a point. I feel I would agree with that, but there are other factors that would actually play into the decline. So I like to think about First Rock as a real estate services company. Now, there are other services in real estate that my mentor's company doesn't cater to. For example, their needs, I should say. There are other needs in the real estate business that my mentor's company doesn't cater to. So there is training of the brokers. So, for example, some of you might know the Real Estate Training Institute on Hope Road here in Jamaica. That's a whole business in and of itself. There is property management. There is landscaping. There is insurance for the asset. So if you think about First Rock as doing the business of real estate, then you can see that there is a lot of potential lines of business and also sources of income that First Rock can actually tap into. Now, the real question is, does First Rock have the competence to get into these different lines of businesses? And on the previous live, I spoke about First Rock's management. So they will provide mortgages then. I cannot say. Daniel, that's a very interesting question. I cannot say. All right. So, right. I was saying that I lost the train of thought. Daniel. Right. So you think about First Rock as providing real estate services, and then you will see that, right, here's where I was. You'll see that there's actually a lot of business that First Rock can actually get into. The other thing about First Rock is that the stock is now trading at a significant discount to what its estimated fair value was. Most of the brokerage houses you would have seen had given the stock, I believe, a fair value between, what was it, $12 and $14? Most of them had it at 12 and 14. The stock is trading at $10 per share. Now, again, I'm going to go back to my investing philosophy. So most of you who attended US MEC or who follow me on social media know that the time I like to buy, and this has been my MO ever since starting, and I'm not knocking anybody's decision to use an alternative method of investing in the market. But for me, I like to buy companies when they are at a clear discount or they're trading at a value below what my estimate and what our valuation at CVI tells us the company is worth. So, case in point, we bought Cygnus Credit Investments back in 2018. Yes, 2018 at around $11 per share. We think that First Rock is suffering from the same thing that affected Cygnus Credit Investments, in the sense that the company is relatively new, it is not fully understood, and it has yet to basically prove itself. However, how we assess First Rock is by looking primarily at the management team, the board of directors, the practicality of the business, the potential profit that the business can make, the time horizon in which that profit can be realized, as well as the current trading price. These are what I call my 7 P's for successful value investing. And I go into them in far more detail in another video on the channel. If you type in the 7 P's for successful value investing, you'll see the presentation I did at the UWI for the Young Investors Club. And so I'm saying that to say First Rock is now attractive to me. It is, and again, this is not an endorsement for anybody to go and purchase First Rock on the information that they're getting here. I'm encouraging you guys to talk to your financial advisors, and I know quite a few financial advisors. So speak to them. Don't let them come and curse me. Say, people say you say. Have the conversation with your financial advisors, and then make a decision as to whether or not this company actually fits into your investment philosophy and into your investment horizon. There are some people who are not going to buy First Rock because they consider it bond-like, meaning they don't expect to see the company giving any significant capital appreciation over the time that it's going to be listed, or over a relatively short time span. Simply said, it's not going to perform like a... Do I want to use Wheaton as an example in this case? It's a bad example, but I'll use it. It's not going to perform like a Wheaton. It's not going to perform like a Lab. It's not going to perform like a Fontana. Alright? That's the expectation out there. My personal expectation is that First Rock at the current price is undervalued, and as soon as we start to see as soon as we see the closure of the Trans-Jamaica Highway IPO, persons will then start to take a really good look at what the business of First Rock really is, and if there is actual value there. My estimated fair value for First Rock is actually closer to $18 per share. And again, I'm not saying that with the intent that anybody should go and purchase First Rock. In fact, I'll go as far as to say that there's a possibility that First Rock will drop even further, given the fact that there are certain other companies that are more highly anticipated and they're due to come to the market in a very short time. All right, so there you have it. Those are two sides of the whole First Rock debacle. The other thing that I haven't spoken about as it relates to First Rock is the fact that First Rock's business model is not solely the business of real estate. It is also private equity. All right. So, and again, I'll liken it onto Cygnus, except in this case, Cygnus is private credit. So whereas Cygnus is private credit, First Rock is private equity. And if I'm not mistaken, it will actually be the first company that's listed on the Jamaica Stock Exchange with a focus in private equity. You guys in the chat, you can correct me if I'm wrong, but I actually don't recall any other company that is listed on the market with a focus on private equity and real estate. So it is this mix that actually makes First Rock a compelling offer, in my opinion. That's what made it compelling. Now, on taking stock, David and myself, we gave our review. So it was David, myself, and Mark. Big up to Mark Gill. The review that we gave, none of us gave us a recommendation, but we did give our expectation. And our expectations were that the stock would actually fall after the listing. Now, for me, I had not conceived that First Rock would fall by 40% within the first week. That to me is ridiculous. Yes, they do have a dividend policy. They said that they would be distributing around 50% of their net income, subject to the need for reinvestment. And the net income, by the way, that dividend is going to be paid in US dollars. Oh wow. Other thing about First Rock, of course, the dividend itself is going to be charged at is going to be taxed at a lower tax rate. Guys, go and review the prospectus, please. Or better yet, go and watch Khalila's show where she talked about the First Rock prospectus. She did a breakdown of the First Rock prospectus. Really, really good breakdown. The dividend on First Rock is going to be at around, what was the rate that they said? I believe the yield is around 8 or 9%. Again, please don't quote me on that. I'm not sure if it's going to be that. All right, guys, please like the video. Just click you might have to come out of the chat in order to like the video, but like the video, it actually helps the YouTube algorithm. All right, so thank you guys very much for that. Right, what was I saying about First Rock? And you guys see I'm spending quite a bit of time on this. So I'm going to wrap up the point just by summarizing why it is that First Rock is. Oh wow, this is big. So guys, you can imagine then, given where First Rock's IPO was, if it is that the stock is now trading at a 60% discount and the dividend policy remains the same, buying the stock at the current price means that your dividend yield, there you go. The dividend yield is going to be significantly higher for anybody who buys First Rock at the current price than even the persons who bought in at the IPO. Had I bought in the IPO, I would be doubling down on my units, such that I would bring my average price down, thereby increasing my average yield. Alright? So that would be my strategy approaching First Rock. Now, I didn't participate in the IPO. I am going to say here that I will be purchasing units in First Rock going forward, primarily because I have a very good understanding. Miyosati, I'm not sure that's going to happen, but like I said, it's possible. So let us actually see what happens. 68 watching, 22 likes. Thanks. So right, so that's right. Miyosati needs to behave. Right, so you're looking at summarizing this now. So First Rock, the company is misunderstood. I liken it onto Cygnus. Most people think it is a REIT. It is not a REIT. It is a company providing real estate services along with private equity, and I didn't delve so much into the private equity part. I will say to watch the company very closely though, because we want to keep them accountable to that mandate, which is to invest both in real estate, income producing real estate, and well, they didn't say income producing, they said they were investing in real estate and private equity. That's one thing. Second thing, the tax rate on dividends is going to be significantly lower because the company is incorporated in St. Lucia. Due to the CARICOM agreement, they're not going to be. Okay, guys, please let me know if you're seeing me. I got disconnected just now. Okay, all right, so I can see Miyosoti is back, so that means yes, Charlene. Yep, back up. All right, thank you. So second point, the effective tax rate on First Rock's dividend payments is going to be 1% as opposed to 15% if you were to buy into any other REIT-like company on the stock exchange. All right? No, it is not a REIT. All right? Another thing is that the company is now trading well below what its listed price was, 40% below. If you guys believe Warren Buffett when he talks about a margin of safety, typically his margin of safety is 25%. You're getting a 15% premium on that. Well, I'm getting a 15% premium on that when I'm buying First Rock. All right. So, with that said, I am going to basically, Shar, please go and, all right. So when I'm done, Shar, please go and watch back the first 40 or so minutes of this. You might gather some insight from it, especially given what you know and what your personal philosophy is. Charlene is a US Met graduate, so I have a fair understanding of what her investment philosophy is. Because we've gotten to talk and all of that. Now, so I'm going to basically conclude on First Rock there. Again, guys, please go and watch Kalila has proposed 3 videos on First Rock. The first is the overview of the prospectus, and then she actually had another one where she had myself, Mark Gale, and David Rose, JC Knight on Twitter, as well as First Rock's chairman and CEO, well, I think he's the CEO, Ryan Reed on the show, and we discussed First Rock and our expectations of the company. I'll take that under consideration. I tried it earlier and it looked funny. So and using the computer, I'm addressing the suggestion to stream in landscape. The quality on the computer was so choppy and lagging that it wasn't compelling in my opinion. So that's why I'm on vertical. The other thing is, of course, if this is vertical, I can put it on our IGTV channel as well. So it kind of works for us, okay? Liam C. Alright, I'm not going to embarrass myself or insult you by trying to pronounce your name. I'm going to move on to the other topic. So the other topic, and I'm going to try to be a little bit faster in this one, was the coronavirus. So most of you would have already at least gotten some exposure to information regarding the coronavirus. Right now, the virus is spreading at an alarming rate. We're literally approaching an epidemic situation. There have been over 20,000 confirmed cases across Asia, and I think close to 5,000 cases outside of Asia. Earlier, while I was on the live, I saw where sorry, I'm getting notifications again. But I saw a notification coming from Bloomberg confirming that there was actually a second death, and somebody in the US. And someone in the comments earlier, if you scroll back through the live chat, let me just find it, highlighted that the first reported death in the United States was actually in New York. Right, so Charlene, interesting that you raised that. So let's look at the effect now on the stock exchanges internationally. Most of the international indices have been down in a significant case. Not dead, first case. Oh, thank you. Well, I think the notification I got just now spoke of a death, but I'll stand corrected if it's the case where it was a confirmed case and not necessarily a death. But the Dow has been suffering primarily because of the coronavirus, and the reason for it is because the Dow is actually tied to a lot of the manufacturing or the industrial companies. The Dow for anybody who doesn't know, actually stands for the Dow Jones Industrial Average, or the DJIA. It's where, thank you. Okay, so there's a second death. I think somebody confirming that. But it's where most of the companies that are like industrial, like the Fords, the heavy manufacturing companies, that's the index that tracks their performance. The Dow has been the one to suffer the most. I believe it's down. It has been down as high as 2,000 points just last week. Now that causes pandemonium. Well, pandemonium is a bad thing, but that wreaks havoc in a, thank you, title industry and manufacturing. But that actually causes a lot of turmoil within the American stock market. This American stock market. The other companies to be feeling the effects of it are the big telecommunications is one, but the big tech companies, primarily those that manufacture or are dependent on manufacturing companies in China. Apple is the one that I covered on the channel. Again, I'll link that video down in the description. But on like the third day, I think the shares in Apple went down by, I think it went down to as high as 5% in after hours trading. The stock actually fell below $300 for the first time. I don't know, I think it was the first time in like 6 months. And again, being a value investor, I was very optimistic. It is times like these that I am very sad that I didn't get my TD Ameritrade account. However, for my clients in South Florida, they are very bullish on Apple going forward. And there was actually an interview with Howard Marks talking about the true impact of Corona on those companies and really what the response in the share price has been. I'm going to link that video. It's on CNBC for you guys to go and watch. But the long and short of it is that he was saying that the market is really overreacting to Corona. One of my other mentors, Patrick David, did a video on the coronavirus on the Valuation channel. And what he did was he compared the coronavirus to other epidemics, or is it pandemics? I'm going to use epidemics. I'll correct myself if I'm wrong. To other epidemics on that have acted on the world stage and their effect on the stock market. And comparatively, Corona is actually having a far lower impact in pandemic global. Thank you, Merrick. So I've been saying epidemic, which is regional or local, but it's truly a pandemic. But yes, so what he was saying is that the effect, when you look at the numbers, if you look at, for example, the amount of confirmed cases and the amount of confirmed deaths, as compared with something like a Black Plague or what was another big thing that had happened? Another big pandemic that we had? Ebola. How did I forget that? But if you look at the effect of, say, an Ebola, or the impact of an Ebola, and then you look at the impact of a Corona, and then compare that to the effect that it had on the indices, the effect of Ebola on the indices was actually less than we're seeing now with the effect of Corona, which tells me that the market is significantly 3,000 points. I guess that's the maximum. Thank you again. That's Aquino. So Aquino is saying that it actually went down by as much as 3,000 points. Oh, correction. So the correction from Bloomberg just came in. It says in New York reports its first. Let me just scroll that down and look at it. Reports its first case of coronavirus in a patient in Manhattan. Right. So it wasn't a death. Bloomberg is now correcting to say that it was a confirmed case and not a death. All right. So I don't remember who it was. I think it was Shani that actually said it wasn't a death but rather a case confirmed. And so I just want to acknowledge her for pointing that out. All right. So globally, here is my expectation. Just to wrap up this corona thing. There are a lot of things right now that are causing the markets to be on edge. All right, SARS. Okay, wow. Thanks. Oh, thanks, Charlene, for that. Right. To continue, and I'm not discounting the effect and the real impact that the coronavirus is having on Shani, okay, is having on real people's lives. I think the economic impact of it is significantly greater, and of course the loss of life is a tremendously awful thing, and it's a terrible thing for any family that has to face that. But in terms of the market as a whole, persons are, in my opinion, overreacting to the true impact of the coronavirus on the underlying value of these companies. Apple, for example, is currently trading at a PE of around 20 times earnings. Like we actually checked today, and the forward PE is under 20, it's around 19 times earnings. For a company like Apple that has its services growing at around 25 to 30% per year, it is remarkable that you would see one event cause the stock price to come down to a level where the forward PE, this is Apple, Apple is still a growing company. Let's just appreciate that for a minute. Apple still being a growing company is trading at a PE of 19 times earnings. There are companies on the Jamaica Stock Exchange right now that are fully mature companies, and they're trading at PEs of around 20, 25 times earnings. In my opinion, this is a clear buy sign. Warren Buffett, as always, said, and I'm going to reach for a book here. Highly suggest that you guys get this. It is a Bible, but it is well worth reading. Now, Warren Buffett said that the time to buy is when there is blood in the streets. And unfortunate though it might be, because there is actual blood in the streets, this, I think, is an opportunity. And I think it's Delon. His correct name is Delon. Delon is saying that there's an opportunity in every crisis, and I completely agree with that. The other thing, of course, is that the healthcare sector has been doing really well ever since the announcement have come out about the coronavirus. I believe we're even at a situation now, and Candy's here. Candy's a medical doctor. It can actually confirm for me whether or not, well, it can confirm that they're having a difficulty finding the hazmat suits. They literally cannot produce them fast enough. We're seeing a shortage right across the board in terms of medical apparatus. And when I say medical apparatus, I'm really talking about like the face mask and stuff like that. So not just the medical manufacturing, but the medical distribution. So, and the pharmaceuticals, those companies are doing really, really, really well. All right, exactly. So blood in the streets, unfortunate, yes, but that's the current situation. And so what we here can do in Jamaica, I think, is to identify companies that stand to benefit from these movements that we're seeing, these positive movements that we're seeing, if you're the type to ride the trend, or on the negative, if you're trying to identify companies that are now trading at a significant discount due to what is actually happening in the international markets. Note also that even though the impact on the international market has been a significant one, the Dow dropping by close to 4%, both the Nasdaq and the S&P 500 recording red days probably for 3 or 4 consecutive days. The Jamaican stock market and the stock market within the Caribbean have actually not seen that much of an impact per se. If you look at the JSE combined index, for example, while the combined index is down relative to what it was, and I'm using context here. So while the combined index is down relative to what it was, say 3 months or 6 months ago, on a nominal basis, the index has actually started, if you wanted to just look at the pure numbers, since the coronavirus has been in the news, we've actually seen only a slight decline. Nothing really significant in terms of our manufacturing or our combined index. Our combined index is trading, is valued around 482,000 points right now. And that value has been maintained pretty, I want to say, pretty stable. It's been maintaining around that number for probably the past, I want to say, 4 or 5 weeks. Again, you guys can, no, I do think that's all right. It's around 480,000. Let me confirm that. Okay, so here are what the numbers are saying. If you're looking at 3 months for our combined index. So if you go back to December, and I need to add a lot of context for this, for what I'm about to say. If you look at where the index was on December 25th, 2019, the value was 503,000. All right? Now, today, the index is around 475,000. Brian, what's that percentage? 500,000 down to 475,000. That's less than 10%, don't it? That's right. That's around 5%. I think it's 5%. All right. Brian is actually working this out for me, so.
Yeah, 5%.
So it went from 500,000. The index was 501,000 3 months ago, and it's now 475,000.
Little over 5%.
Right, so a little over 5%. Thank you. And I see the almost 6%. But we have to remember that the declines that we've seen in our combined index is not really due to a response to Corona, so much as it is due to a response to Trans Jamaica. So I won't poke fun, but I was going to poke fun. In terms of the impact of Trans Jamaica on the index versus the impact of Corona on the index. You guys will get it. But yes, and in fact, over the last, say, 3 weeks, what we're really seeing is a rebound in the index, because of course most people would have already applied for their Trans Jamaica shares, and so now as they continue to rebuild their capital, they're going back now into these companies that would have seen a steep decline. So guys, something that I've realized from my 5 or 6 years doing this is that there is always, and I emphasize this, there is always an opportunity in the market. Whether the market is going down, whether the market is going up, whether it's staying flat. And you'd think there aren't opportunities when the market is staying flat. Which brings me to raise something. Here's a book that I would recommend you guys read if you want to know how to make money in flat, or what we call sideways markets. And this is actually written by Vitality, sorry. Alright? Vitaly is a completely different person. Alright? But what I want to emphasize though, guys, is that there are opportunities in the market, remarkable opportunities. You'll get there, Charlene. You'll get there. All right? And so it's about you guys talking with, good point, Candian. Okay, so let's look at that, for example. Let us look at possible companies that are being impacted by the corona. All right? I didn't finish what I was saying, but forgive me for that. Effectively, I was saying there are opportunities. There are always opportunities. All right? Really? Why you ask that? Watch the live again. If you miss the opportunity, watch the live again. Um, okay, and the guys in the comments are helping you out. So, thanks, Charlene. So there are opportunities. Let's look at the potential impact. So on a negative side, one might say, and it's actually been shown because there is a video going around, that Kingston Wharves and Cargo Handlers Limited are being negatively affected by the coronavirus. I will agree with that because, of course, Jamaica being primarily like operating pseudo like a transshipment hub, as well as a lot of different manufacturers requiring materials from China, a lot of distributors also requiring stock from China, and they're not getting that. So that business is kind of on the decline, has been on the decline now, and so we've seen a very real impact on Kingston Wharves and also cargo handlers. I believe Kingston Wharves has released their numbers or are due to. Let me confirm this. Let's look at Kingston Wharves here, and I know it's going to be dismal, but let's look at it. Okay, so here is the 52-week statistics for Kingston Wharves. Over the past 52 weeks, Kingston Wharves has traded at a high of $78 per share and a low of $47 per share. Guys, that's almost 100% between, in terms of the spread, over the 52-week period. Now, before the guys jump on me, as in the day traders, let me say that for me, 100% on any investment within a 1 year period is a remarkable return, and this is because the typical return from the market is around 8 or 9% adjusted for inflation. All right, so you're getting 100% within the span of a year. That's an astounding return. We've been spoiled, I want to say, to a degree by just the performance of companies on the Jamaica Stock Exchange of late, where we're seeing companies double or triple. I would like to think that recent cases such as QWI and even First Rock would have allowed investors to sort of appreciate that really the expectation coming onto the market ought not to be that your stock is going to double or triple within the first week, and it can very easily take the opposite trajectory based on what's happening in the market. And this is why it's important to look beyond what the stock price is. In terms of Kingston Wharves, over the past 3 months, the high has been $71 and the low is now at $54. So the questions to ask are: what opportunity is there, if any, in terms of where Kingston Wharves' current stock price is? How long will that opportunity, or that the dismal, not resign, be made redundant? Oh, right. Oh, I saw that. The news article about the employees being made redundant. I don't think they were actually being made redundant. I think they were just being let go or being asked to take a pay cut. That's correct. No problem, Delon. Right. In light of where the company is, because these people are literally, there's a video, I wish somebody would find it and put it in the group, but the video actually shows where the wharf is literally empty. So you can imagine that revenues for Kingston Wharves for this quarter is going to look really bad. The question is it time to get in on Kingston Wharves while they are in crisis? That's the question for you. You and your financial advisor will have to investigate that. Caribbean Value Investor will be doing its own independent research and publishing that, as well as our opinion on Kingston Wharves going forward. And it's going to be qualitative and quantitative. So just putting that out there. I would suggest to you guys to go and actually speak with your financial advisor, try to get them to work with the research departments in the brokerage houses to find out what, if any, opportunities are actually here within the market now, particularly for Kingston wharves and cargo handlers. I would take it a step further to look at the distribution companies, if any, that are reliant on imports from China specifically. But I don't want to just confine it to China, because we've been seeing that there has been a surge in the amount of reported cases in Europe, specifically Italy as well. So you want to keep that in mind. Miyosote, I like that. I'm just putting it out there, I like that. So again, keep that in mind. Alright, so I'm going to now segue, because we've been here for 60 minutes, and I did say we should be here for until around 10:30, and I do want to get to Italy is the runner-up. Wow, I didn't know that. So thank you for that. So Charlene is saying that actually Italy is like one of the runner-ups in terms of the amount of cases that we're seeing now. All right. Oh yes. Sizzla Kalonji is saying that we should also look at that's Jamaica Producers, that's JP, and I can see why. I'm going to charge you guys to go and look at the relationship between Kingston Wharves and JP as well. So what was the other thing on the agenda? I think the runner is outside of vision. Okay. So, right, this allows me to segue perfectly into the present and obvious opportunities that are on the market. So what are the obvious opportunities? Oh, PULS's stock split. We're going to come back to that. Present opportunities. For me, I like to understand what the value of these companies are. In order to identify what the present opportunities are, guys, you need to do two things. You need to look at the company's audited financials. You need to look at the qualitative factors that affects these companies, and then to assess where the stock price is, and if it is that the current stock price is below what a fair value is. And I'm going to clear up what I consider a fair value. For me, a fair value is not the enterprise value or that value that the stock brokerage houses actually works out. A fair value for me is a fair price to pay. I shouldn't do that, I know, but I'll make the distinction. So really what I should ask is, or rather what I should commission you guys to do is to look at what the fundamentals are, and then assess whether or not there is the price that the stock is trading at is a fair price. If you can identify that the price is either over valued or undervalued, then you may be guided accordingly, with of course the input of your licensed financial advisor. Good. So having said that, looking in the chat, I can see persons naming quite a few companies. I won't say them here, lest it be said that I mentioned X and Y, but there are quite a few companies that persons are saying that there might be opportunities there. For those of you watching, look back at the live chat, and then of course do your own research to identify to come to an assessment or a view on where those companies might be. All right. So right, I was supposed to also cover 138 Student Living's annual general meeting, and I'm just going to talk briefly about it. I put up yesterday, I think it was yesterday that I actually uploaded the video. It's a presentation by the current CEO. This is a very new CEO. He actually joined in June of 2019, and so far we've seen what the last quarter results for 138 student living have been. So I want to say that I'm not going to say optimistic at this point, but I'm watching with very keen eyes as to what this new CEO will bring to 138 student living. And you guys can go and watch the highlights of the annual general meeting. It's covered on this channel. I'll put it in the description after we're through here. And also, I would encourage you to watch the CEO's presentation and to stick around for the question and answer section that followed the ordinary business of the company. 138 right now is trading at around, I believe it's $8 per share. Somebody can, let me check. I have the computer here for that. So 138, 135. Somebody is telling me what it is. Alright, so guys, again, please, oh, and I'm seeing you guys doing it. What was the reason for the spike? I did a video on that. So the video is called 100% stock increase or something like that. It's on the channel, so it's trading at around $6.23. Thank you. And that's actually down from the high that it reached. The high it reached was, I believe, at $10. I think it was $10 per share, somewhere there about 8. It went to 8, it went to 9, and I do believe I saw a trade at $10 per share. But please let me confirm. Let me confirm this, guys. 9.48. Okay. Thanks. Right. So there are 3 videos actually on the channel regarding 138 student living. So once you guys get off this live chat, you can go and look at those videos. I won't belabor the point, especially since I am keeping you guys and we only have 15 minutes remaining here. The other thing is PULS. So no, I have to step back, because there's an interesting thing that was suggested at the annual general meeting as it relates to 138 student living. And I can say it here. One of the visitors to the shareholders meeting actually suggested that the company do a stock split. And management, their response was that it is something that they would discuss at the board level. I cannot say whether or not the company will be doing a stock split. I can say it would be welcomed and that I would support it. All right, and I will leave 138 there, and onto PULS, which pretty much has been what everybody's favorite stock over the past few I want to say months, because we can really go back to December to talk about PULS. Proven's APO, yes, that's coming up. I don't know if it was declared. I will agree with you. It was in fact an amazing buy. So if you go back to, no, I'm looking at 138 again. Right. So just to close out 138 stock price is actually up 100%. That's how high it went to. It went north of 100% within the span of a week. So that's what the video is about, and it talks about what were the key drivers for that. There are a lot of them, and the thing about it is that they're not just one-off situations. There are situations that could continue well into the future. The CEO's presentation is something that I highly encourage you guys to go and watch, and then to leave your comments in the description. Sorry, in the comments. And we will actually talk a little bit more about it, because I did get to speak with him after the presentation. And you can also stay tuned to this channel, because we will be doing an interview with the CEO of the newly installed CEO of 138 Student Living over the next week, or it's not week, he didn't say week, over the next few weeks or so. All right. So looking at PULS, so PULS's stock price from December, PULS was trading at around $4.30, and there wasn't much activity, interestingly, around the stock. This, even though the company, or rather the board, were announcing numerous things that they had planned and numerous initiatives that they wanted to start. These are not new, because they were covered in the previous annual report, where the company was talking about acquiring new land for development, as well as they were talking about broadening the, I think it was running the revenue stream. There was the word that was used, diversifying PULS's revenue stream. So it's actually no surprise then when we saw on December 27th, where around 60 million units of the stock traded at $4 per share. Alright, so guys from US MEC will know that this is a perfect coattailing setup. If you look back at the chart, do I want to turn you guys to it? Alright, I'm going to do that because I really want to show you guys what this setup is. And forgive me. Oh, what does it look like? Can you guys see that? Okay. Let's see if I can position this phone properly. Let's see. Can you see it? Alright, so you see that big spike right there? That's what we call a that's a setup for a coattailing move. What it's basically saying is that there was an individual or an organization that made a significant purchase in the company, and were you to go and investigate why that purchase was, you could actually coattail on that trend. If you had just looked at that and said, okay, clearly people are buying the stock. And by the way, the coattailing is an actual strategy that is used by a lot of sophisticated investors. Michael Leachin coattails Warren Buffett as best as he can. And there's still a lot of multi-millionaire investors here in Jamaica who will coattail like a Michael Leachin, alright, or coattail other directors within the company, within various companies, that is. That spike is saying that, okay, there is a huge interest, it's an abnormal trade in the stock. When you saw that, the task would have been to go and investigate what could have caused somebody to trade 60 million units of a stock that on average was trading. Oh, alright. Well, you can load up the chart, guys. If you're near your computer or even after this live, you can load up the chart. Put it on the 3 months and you will see, whereas the average units trading between, say, December or between November of 2019 and December 24th were between like 20 something thousand, 5,000, 1,000 units. Thanks. Thanks, Brian. Right. So, right, guys, please, if you can, there are like 73 of you here. So if you just come out of the chat briefly and click the like button, it actually helps with the YouTube algorithm, okay? You see from your nose down, my nose down, really? That's odd. Who said I was seeing my nose? Anyway, so right, what are we talking about? All right, getting back to the coattailing strategy. There's a video also on the on Beyond the Stock Price that details what the coattailing strategy is. And I talk about it in USMEC as one of the strategies that you can use to actually profit from the stock market. PULS had a perfect, and I'm not kidding, a perfect coattailing setup up until January 21st. And in fact, you could extend that. Right, up until February 5th. Up until February 5th, the stock was trading between, it went from around $5 to a high of, say, $7. But within that, you'd have had the opportunity to buy the stock anywhere between $4.10 and $6, and I think the maximum was that $7. Between $4.10 and $7. And if you look at where the stock is trading now, it's around $11 per share, the highest price reached being $12. And that would have been, again, a 40% gain, even if you had bought it at the highest price within that band. Alright? So, you guys can take this as an example going forward. This is one of the things that we look out for when we're trying to kind of trade short term. Well, not short, it's medium term within the market. We look for coattailing opportunities. In the video, I talk about 3 or 4 other techniques for successful investing in the stock market. The presentation is titled Winning Trading Strategies. Charlene raises an excellent point. Coattailing is everything, and you can see it with BlackRock and First Rock locally. Saw a big buy with QWI last month. We could talk about that. Like, we could talk about what's happening with QWI as a potential coattailing strategy as well. Unfortunately, I only have around like 8 minutes here. Miosoti, go and investigate BlackRock. So BlackRock is the company that First Rock is modeling. They are coattailing First Rock. And I didn't even raise that point. But that's a big thing. We talked about it in USMEC. Interesting. Now I can see that Charlene, like, it's like I need to give you like a scholarship or like a gift, a prize for paying such good attention in the class. I don't know what I can get you. I don't know. Books. I like to give people books. All right. So I'm going to get you a, well, I know you have a physical copy of my book, so that won't help you. What I'm going to give you is I'm going to get you a book that is not a Bible, but it's a really good short book that's going to help you to get better at the coattailing strategy. So you can expect that gift from me. Afterwards, you can message me and I'll send you that. I think I just set a very bad precedence on this live, you know. But I don't mind, alright? So, guys, it's now 10:25. We don't have a lot of time. Did I miss anything that we're supposed to talk about? Pulse's stock split has been in the news. The reason for the stock split, of course, is to increase the liquidity within the markets, as well as to give investors, new interested investors, the opportunity to buy into the company. And we spoke a lot about why companies do stock splits. Kalila has a really good video on it. I'll link that in the description. So go and check out Kalila Reynolds' channel and look for that video on what is a stock split. I'll also link an article from Caribbean Value Investor in the description where we're looking at what a stock split is and why companies do it. And there's a quiz in the article about stock splits. So most of you can actually answer that quiz and then see what is happening. See if you fully understand what the stock split is. So whilst I'm here, so somebody is asking about the proven APO and the Cygnus rights issue. What of SIL Financials? What's SIL? Sterling Investment Financials. Alright, guys. Unfortunately, I do have to run. That's kind of why I had to limit the live for just this period. But I'm taking note of all of these, all of the questions. So somebody asks about Proven's APO, and on the last episode of Taking Stock, they actually what's his name, Julian Morrison at Wealth Watch Jamaica. So on Wealth Watch, good luck, they help you with the video setup. No problem, I'm open to that. So guys, go and find at Wealth Watch Jamaica. He probably won't be able to say much about it now, given his position at Proven, but there is a lot of information out there about what Proven is doing with their APO and what their intention is. I won't speculate, as some persons tend to do. What I will say is that we know that it is coming in fairly short order, and it will just be interesting to cover what that prospectus, or rather what that offer letter looks like, and I will do a live on it as well. All right, what else do I need to say other than thank you guys for tuning in? What? Oh yes, the like, of course. So now we're at 67 of you guys. As you're coming off, as you're exiting the chat, please just press that that thumbs up button, the blue thumbs up button. It will go a far way in helping persons who will want to find the discussion thereafter. If you guys are beginners, then you can also check out my book on Amazon. It's called Stock Market Investing 101, and it's sold at a very, very low price. I think it's like $5 for the ebook. The glossy printed version is for $5.80 something, and the ebook, which is the version I actually advocate for persons to buy, is for like $3.43. The reason I advocate for persons buying the ebook is that there are many live links in the book, that in the ebook, that if you thanks Charlene. And the second app will be combined with the first. Okay. Not sure what that is. Anyway, not sure what that is. So if you guys get the ebook, then you can use the links to go immediately to the articles that we reference. If you get the physical book and you want me to sign it, my contact information is pretty much all over social media and all over the internet. So you guys can find me and reach out, and we'll arrange like a book meet or something like that, and I'll give you guys sign. I'll actually do a signing. I want to make one final announcement before I go, and it's that Caribbean Value Investor is going to be launching our magazine very soon. I won't say much more about it, but it's going to be coming out in line with the Trans Jamaica IPO listing. So you guys can stay tuned for that. If you follow our social pages at BeyondTheStockPrice, at Devrhoid, at CVI Jamaica, across all platforms, you will see the promotional stuff coming out. But our magazine is coming. It's going to be a quarterly publication, and I'm also writing another book. It's going to be a thicker book than this. It's going to be about this thick. Right, so this book is the little book that beats the markets. And my book is going to be titled, well, I can't tell you the title yet. Right, so the publishers won't allow me to say what the title is. It's not going to be self-published. So you guys can look out for that, and I'll let you guys know as soon as you can pre-order it. All right. If you guys want some reading suggestions, I have 3 of them here. and they all talk about valuation and how to identify, I want to say, potentially profitable opportunities within the market. I think that's how I want to say it. So all three of these will help you to identify potentially profitable opportunities within the market. The first one, and I've spoken at length about this, is the little book of valuation. They're all around 300 pages, fairly short books. I think this is even less. And if you ever wanted to know, well, the titles all say what the books are. And the titles are not hyperfluent or exaggerated. These books literally do deliver on what the titles say. So this is the first one. The second one is the little book of sideways markets. It talks about how to benefit from sideways markets. Most people tend to think that there are no opportunities within sideways markets. I made that mistake in 2014. Not one I'm likely to repeat, having gone through this book. And then the last one is by Joel Greenblatt. And it's a little book that beats the markets. If you guys only read two of these, no, as a matter of fact, I'm not giving you that option. Read all three. Alright? So if you guys wanted to get like to intermediate level of investing, these three books would be my go-to suggestions. Of course, you want to read The Intelligent Investor. Let me find that. Guys, on another live, I will actually show you my full library. So this is what I would suggest you guys get. I think all told, this is about $50 US to buy all of these. If so much, it's probably fine. Let's say it's $100 US you're going to pay to buy all of these, right? It's well worth the investment. Wi-Fi is gone. All right, and I'm going to actually leave links to these in the live, in the description, and you guys can let me know what other books you're reading as well to improve your financial literacy, and you can write it, okay, and become better investors. So guys, thank you so much for joining this live session. I do hope it was valuable to you, and I look forward to answering any questions that you might have in the comments. Any suggestions you have on how we can improve, that is always appreciated. And be sure to check out the other channels, other videos on the channel. Check out our second channel, Caribbean Value Investor Corporation. That's my company's channel. And like, comment, share the video with somebody you feel might benefit from the information. All right. So thank you guys, and I hope you all have an amazing night and a wonderful week ahead. Okay. Bye.